Have you ever paused to consider why a high-rise building or a sprawling residential complex, despite the hefty price tags, often need additional funding for development? The answer, quite simply, is that real estate projects are massive undertakings that require substantial capital. The story of the Emerald Skyline, a 60-story residential building in downtown Seattle, offers a fascinating look at the world of real estate funding. This project was financed not through traditional bank loans, but through a method called equity funding. Equity funding is a method of raising capital for a project by selling a portion of the project's ownership to investors. These investors can be venture capitalists, angel investors, or even individuals who believe in the potential of the project. In the case of Emerald Skyline, the project's developers sold a 30% stake of the project to a group of venture capitalists. This form of funding offers several advantages. First, it allows the project developers to secure funding without incurring debt. Second, it provides the investors with a share of the project's profits proportionate to their investment. And third, it creates an incentive for the investors to contribute to the project's success, as their return on investment is directly tied to the project's performance. Despite these advantages, equity funding also comes with its share of challenges. For instance, the project developers must be willing to give up a portion of their project's ownership and control. They also need to convince potential investors of the project's viability and potential for success. In the case of Emerald Skyline, the project's developers faced these challenges head-on. They presented a compelling business case to potential investors, highlighting the project's unique architectural design, prime location, and potential for high rental income. They also leveraged their track record of successful projects to gain the investors' trust. As a result, they were able to secure the necessary funding and retain majority control of the project. At the end of the day, the success of Emerald Skyline serves as a testament to the power and potential of equity funding in real estate. It demonstrates that with a compelling project, a solid business case, and the right investors, equity funding can be a viable and beneficial option for financing real estate projects. So, what are the key takeaways from this discussion? 1. Real estate projects often require additional funding due to their large scale and high costs. 2. Equity funding is a method of raising capital by selling a portion of a project's ownership to investors. 3. Equity funding offers several advantages, including the ability to secure funding without incurring debt and the creation of an incentive for investors to contribute to the project's success. However, it also comes with challenges, such as the need to give up ownership and control, and the requirement to convince potential investors of the project's viability. And finally, the success of projects like Emerald Skyline demonstrates that with the right strategy and the right investors, equity funding can be a powerful tool for financing real estate projects.